Hello traders, welcome back to our channel, and in this video I'll be taking you guys through the potential trading opportunities for the week ahead, and then I'll also take you guys on a recap on our previous weekly analysis and all our trades I've hit, take profit and beyond. So to kick things off here, we have S&P 500. I highlighted this market right here. I told you guys they were actually looking to go long from this pair here, on this pair here, rather from this point. Now the reason being that this is actually a break and retest, and then this is also a Fibonacci level. So I sent this trade out to my Telegram community, and then I also came on here to actually let you guys know how things were going on the trade. And so far so good, we've hit our first profit target here, which was 4,695 basis points. And for me personally, I have a policy of taking out 50% of my total profits once I've hit the 100% retracement point, because these often serves as a recent high or recent low, and the market tends to react or actually reverse or pull back from that region. So as we speak, I currently have 50% of my profits in my pocket, and then I have just a little below 50% just currently floating to wait and see what the market has, if the market has more to offer, because I can see some more pips to the upside. My overall level target for this guy is actually 4,800 basis points. However, you guys know the market doesn't just move in a linear format. If the market is going to move from point A to point B, it's going to do so in a wave. As you can see here, the market was going to move from here to here anyway. However, it didn't just drop out of the sky. It went in waves. So for me personally, I am actually anticipating that we are going to have a pullback here on the S&P 500, and then once we see a decent pullback like this, we are actually waiting for candlestick confirmation here or some sort of entry strategy before we now actually go long on this pair on our overall level target being the 4,800 basis points for the S&P 500. So how do you take advantage of this opportunity? Once again, wait for the pullback here. To be honest, going into next week, I'm not actually pressured to take any trade on this pair, because I actually have some positions still open. So even if the market decides to rally all the way to the upside without giving us a decent pullback, that's fine by me, because I have an early entry here all the way down here. However, for me, I'm actually anticipating a healthy trend on this pair, which would actually include a pullback to this level, and then once you see a decent pullback, we can rally all the way to 4,800 basis points. Now, if you're new to this channel, make sure to subscribe, hit the bell icon, and then leave a comment if you want to be profitable coming this week and this year with us on our channel. So the next pair on my list is the EurUsd. Now, this is a commonly traded pair all over the globe, has a lot of liquidity, and it's one of the easiest to trade, to be honest. I strongly recommend this pair for every trader, for every newbie. So what's up with the euro dollar is this: we're actually experiencing a pullback from this collapse here. This collapse took 2 years. All right, so we actually, and one of the principles in trend trading is that after the market has collapsed here, we need a decent pullback. So say for instance that the market has trended for maybe 500 pips or 1,000 pips, you need a decent pullback to at least half of the entire move, all right, to pull back to at least half of the entire move before we see a potential continuation or a reversal. So for me personally, I said that you guys should be watchful of this level here, that we could potentially have head and shoulders forming on the euro dollar, and that is in fact what the market is actually doing. We rallied all the way down here. We didn't have any decent pullback, so that is exactly what the market is doing. It has pulled back to this point. But for me personally, for some reason, I still don't see myself going shorting this pair full on. Okay, I still don't see myself shorting this pair full on, and in just a bit I'll show you guys the reason as to why I don't see myself shorting this pair moving into next week, because of what the dollar index, the DXY, is actually printing. So how do you make money off of the euro dollar moving on? So you guys know I'm a big fan of pullbacks. I'm a big fan of trend trading. So this is a medium-term trend here, which is bullish. And for me personally, we just blew through this short-term level, this recent resistance here, and we hadn't pulled back for a decent, consolidation or whatever. So that is exactly what the market is experiencing right now. The market is actually, at this point here, it has hit the red shoulder point, which also serves as a resistance if you look left. All right. So now, for me moving on, into next week, I'll be looking for a potential buying opportunity. I'm selling this market next week is not an option for me. I'll be looking to buy this market because this is also a very, very juicy setup here. We've not had a decent pullback to complement this entire stretch here. So for me, I'll be waiting on my hands to see. I'll be sitting on my hands to see what the market has to do to pull back into this point. Then I'll be looking to go long from here, and that will be my final bullish trade on the euro dollar except we blow through this level, which is highly unlikely. However, in this game, anything is possible. So for me personally, next week I'll be looking to buy the euro dollar. I'll wait for a pullback to this level here. Once I get a decent pullback, then I'll look to go long on the euro dollar. So that's that about the euro dollar. The next pair on my list is a cable, which is the GBP USD. So GBP USD has similar setup to the euro because they're actually positively correlated in the sense that if the euro dollar is rallying up, now the cable will most likely rally up as well. So similar thing has happened 2021, 2022 had this massive collapse, and then now the market is currently putting in a chart pattern that is looking like it's going to continue to the downside. However, now for the cable, there's something funny happening. And one thing about me is, guys, I've been doing this for well over 6 years, and I know exactly when the market is about to trick a lot of people and fake you out and take your money. So I come on here to let you guys know on time so you know how to avoid it. All right. So what we are actually experiencing here is a Fibonacci pullback on the cable. All right. So I see absolutely no reason why I should be long this pair or sell this pair. I don't have any reasons as to why I should be long this pair at the moment. In fact, I am actually going to be waiting for a pullback once again into this recently broken structure here. All right. Because this was the first smaller pullback, because the market gives you two kinds of pullback. The first one is always very, very minimal, and then the second one is always the biggest. All right. So this is what I am actually waiting for. I like to see the market pull back into this point here, either this particular level or this particular level. Down the two levels I'm actually waiting for, but the most distant one and the most profitable one and the most healthy looking one is this level here, right at 1.23972. So I'll be waiting for the market to pull back, and then this is also a trend line. So whenever you have the trend line support and Fibonacci lining up, that is a very, very, very key and potentially profitable trade to take. So for me, I'll be keeping a close watch on the pound sterling. I'm waiting for it to pull back into this level here. Then I wait, and see how the price action looks like. If it is decent, I might, hop on and trade all the way back up here before we actually collapse to the downside long term. So the next pair on my list here would be gold. Now, guys, whew, we made so much money off of gold, guys. We made so much money off of gold. Kid you not. So I came on here because one of you guys recommended. I actually asked that I do an analysis on gold, which is the reason why I asked you guys to comment. Let me know the pair that you're actually struggling with, so I can break it down for you in a decent format. So we were actually trading off here, and then I told you guys to chill that we are actually supposed to have a pullback on gold, and we actually did that. So we went long on gold here. Okay, somewhere around November 10, there about 2 weeks. So we went long on gold, and I told you guys that my overall level target for gold was $2,71 per ounce, and that is exactly what we have done. We have hit all level targets here for I think over 1,000 pips. All right, we've actually done 1,301 pips, all right, in just 2 weeks, and that's all about gold. So for me personally, I do not actually see myself going long or going short on this pair, considering the fact that this is a pair that is largely affected by geopolitical activities, or like the wars, the uncertainties. So this pair is actually very, 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 very luxurious. But for me, if I'm to take any trade here, I would actually wait to see what is happening here at this level, since this was the previous resistance and you guys know that it tends to become support in the future. But one thing that you have to notice that we have actually hit key highs. All right, we've actually hit the highs of gold right here. Okay, so for me personally, I would actually advise that you step away from gold for a while. Okay, let the pair just breathe. Just take it, just take your mind off of gold and then focus on other things. But if you must trade this pair, I would actually advise you wait for a decent pullback to this point here. Okay, to this point here, and then we now buy, or you wait for a decent pullback to this point. But for me personally, I would actually sit on my hands and allow gold pass, because I have made a significant amount of money from this point to this point. 1,300 pips, that's a lot of money on gold. The next pair on my list now would be the USD CHF. USD CHF, yeah, there you are. So USD CHF gave us huge amount of pips. I'm telling you, way more than we actually anticipated. So I actually had my level here, which I had deleted because it's become useless because we made so much money off of it. Now USD CHF was somewhere around here, and then I told you guys to wait for a pullback into this region. See, once again, the first pullback, then the second bigger pullback. All right, so that is exactly what we had. And then how do we take advantage of this trade? We had the 4-hour candle break and close, which is my entry strategy. 4-hour candle break and close here. All right, so we rode this guy all the way to the downside. It gave us huge amount of pips, guys. Huge amount of pips, 274 pips. We smashed TP and they've actually broken below our TP point. So, but for me, I do not see myself selling or buying this guy. I'll actually. So I have a policy, guys. Whenever the market has made me so much money, I tend to step away. Whenever a particular pair has made me so much money for a while, I tend to step away, just have fun with life, and then let the market kind of recoup and then let it recover. Then I'll come on here for the best opportunity. I see no reason why I should be looking to buy or sell this guy, because this is actually sitting on the support. This could actually be a fake out and then we could rally back up. So now the next pair on my list is the USD JPY. Guys, USD JPY is about to give us a shit loads of money. You guys are about to make so much money off of USD JPY, you'll be shocked. So I highlighted this level here on the USD JPY. I said, listen, I've been doing this for well over 6 years, and I know exactly when the market is about to trick you guys. Look, this is a breakout, no doubt, but this is not a convincing breakout considering how far we've come. You get, considering how far we've come, this is not a decent breakout here. So I saw a lot of people going long on USD JPY. I'm like, bro, you need to go on the higher time frame and then you need to see what the market is in. This is why I strongly recommend something like analysis, because it takes you to the higher time frame. Then you see the bigger picture. This is the bigger picture on the USD JPY. So for me personally, I highlighted this level. I said the market has to come down to this level before I take any trading opportunities. If it doesn't do that, I don't see myself trading USD JPY. And I sat on my hands and I waited for a good 2 weeks or 3 weeks, and then the market has actually started to pull back to this point here. So for me, I'll be looking to go long on this pair here, either at this point or at this point. Now the reason as to why I think it's gonna come down here is because this is also a Fibonacci level. All right, recent low, recent high. It aligns perfectly with our key levels. So for me, I'll be looking for a nice pullback here. It is already starting to flag nicely, So I'll be waiting for something that looks like just like this. All right, a 4-hour candle break and close, and then we'll ride USD all the way back to the upside. But now the last two pairs on my list will be the dollar index and the Japanese yen index. And then I'll take you guys through, and then I'll show you guys exactly why I'm actually very, very um, um, bullish on the majors, and then bearish on the dollar and then Japanese index. So what we have here is the dollar index pulling back nicely. This level was highlighted in my previous video, and we have actually done just that. So now, reason being, we could actually come on here and reverse, no doubt, but then we could actually still come down here and reverse, because now this is looking like a head and shoulders pattern for me here. This is the head, this is left shoulder. We could potentially come in here to put the right shoulder before we reverse if this level does not actually hold. Okay, so but then I highlighted this level because this is also a Fibonacci level. If you pay close attention to your fibs, you actually understand that this is also a Fibonacci level. So it's a 50-50 scenario here for me. But for one thing for sure, moving into next week is that we are definitely going to have a pullback to this point here. We are definitely going to have a pullback to this level here. We are certainly going to have a pullback to this point before we now come back down. If at all we are actually going to come back down to this level, that is entirely up to the market. But I'm telling you that we're actually going to have a pullback here, considering how we reacted to this point. This is a daily bullish engulfing candle. We're actually coming here, guys, which is exactly why I said that the euro and the pound sterling are actually going to collapse. All right, collapse first, and then we then go long finally. So I still feel that we have one more leg to the upside on euro dollar and GBP USD. So that's that about the dollar index. I am still very, very bullish long term on the dollar index. In fact, I actually think that our overall level target on the dollar index would be 114.174, and if that place doesn't hold, subsequently we should see a higher high, at 120.753 overall long-term target for the dollar index. So the last pair on my list will be the Japanese yen index here, which is exactly why I tell you guys that you should wait, that we have a lot of money to make on USD JPY moving on. And I'm telling you, it's a really long-term trade that's going to last for about 2 years, 2024, 2025. All right. So we've had these there's a significant chart pattern playing out on this time on this pair here, which is the head and shoulders pattern. So we have a significant head and shoulders pattern playing out here, as you can see. So this is the head, this is the shoulder, and we've broken neckline here. And guys, you guys know that in forex, if you've ranged for about 150 pips or 1,500 pips, once you break out of that range, the pair tends to rally to the exact amount of pips accumulated. So we have actually been here for a long ass time. So this is the breakout, this is a retest. So this is just a temporary pullback. And my overall level target for this guy, if the Japan central bank does not step in, we should see the Japanese yen collapse further into 0.004685. Now this is a pair that I've been trading since the beginning of the year 2023 January. Once again, you can go through my videos, you can see I've been calling out these pairs level by level, and we've made significant amount of money from that. So moving on this pair here, we should actually see a pullback, which is exactly what is happening. So we should see a pullback to the upside here, because now we've hit equal lows. All right, we've hit equal lows, so we should see a pullback, and that is exactly what's happening. So my level that I'm actually watching out closely for this index is at this point here, which is the reason as to why the USD is pulling back. All right, everything aligns perfectly with my analysis here. So I'm actually paying close attention to this point here. So are we going to have a deeper pullback, maybe to this point here or to this point here? Is entirely up to the market. For me personally, I believe that trading is reactive and not predictive. So whatever the market chooses to do, we hop on there and they'll make money. And they'll make money. So I have a bigger Fibonacci play here, okay, and then I have a smaller Fibonacci play here. So two things I'm actually looking out for, two things. So if this level doesn't hold, certainly this level is going to hold, and then we should actually rally to the downside. And then subsequently, if this doesn't hold, then it is a free fall on the yen index, free fall on the yen index for 2 good years. We should see this pair collapse totally, and then that will send USD rallying to new highs, come 2024 and 2025. All right, guys, that is the end of our episode on this weekly outlook. So I'll see you guys in the next episode. Peace out.